All right, so we're having a pretty interesting week to start out with in gold and silver. Today, we're going to primarily talk about gold and why we've been seeing, in general, since last week, prices rising and why we've been seeing it stall a little bit to start out this week. Now, to continue along with this thought, I'm going to show you a little bit of a graph here. So far, we have the gold price just ramping up for the last few trading days, and we're starting to see a little bit of a slowdown here. And I don't want you guys to think that this has anything to do solely with gold, but it has everything to do with what's just happening in markets in general. Now, we're starting to see a lot of selling happening. We're starting to see a lot of rotation happening. And this is actually one of the reasons why, even if you're not into equities, it pays to help focus a little bit on what's going on within U.S. equities and so on, because it helps with your explanation with what's happening in gold and silver price movements. So, for example, a lot of analysts have been talking about the rotation from defensives, some of the high growth tech stocks, into cyclical plays. So think of things like commodities or stocks that are driven by commodities versus the high flying tech names such as Tesla. I mean, if you look at Tesla, they have been struggling recently. And if you're familiar with somebody named Cathie Wood, she has an ETF that tracks a lot of these high flying tech names. And that has been down about 35% since its height in this calendar year. So there's been a lot of rotation that's been happening on and off, and it hasn't been ending. And as you can see this week, the VIX has basically taken off, substantially. We had it start out pretty much on Monday in the 17s, and it got as high as 22.87 today. So that's a pretty significant move, about a 13.22% move as we speak right now. So that being brought on by a lot of this rotation is causing the dollar to get a little bit of a bid, nothing too significant, but it makes it so where it makes gold and silver bump into a little bit of some downward pressure. But again, nothing too concerning. This is all just temporary. And this is the thing that we all should be focusing a bit more on, which is the idea of gold and silver and other precious metals and commodities too being a part of the reflation trade. Now, I did mention that, a lot of people are leaving tech stocks and going into cyclicals, and some are even looking at the reflation trades as being a play as well. So if you take a look here, I'm just going to read this one highlighted paragraph just so we can understand a little bit more about what's going on here. And I quote, while the major economies of the West have not yet been reporting inflation numbers that are concerning, China has just reported its producer prices climbed at the fastest pace in 3.5 years in April, reflecting a big rise in input costs. Producer prices rose 6.8% year on year in April, up from 4.4% in March. China's consumer price index increased 0.9% year on year in April, while demand continuing to improve compared to a 0.4% reading recorded in March. Meantime, China's central bank raised the yuan currency fix against the US dollar to 6.4254, giving some relief to importers of commodities. Around 100 steel mills in China have raised their prices, and reflecting strong demand and rising iron ore prices. The rise in steel prices may threaten a range of downstream industries. Remember that history shows hard assets like the metals tend to see their prices perform better during times of rising inflationary pressures. And you guys have seen me show graphs of the 10-2 yield curve, where when you see that steepening, it's a key in from the bond market to tell you, hey, expect inflation to rise sometime in the future. And we saw that impact happening in the late 2000s in the noughties. And we saw and we all know what happened with gold and silver around that time. So, and I've shown that graph a few times recently, and basically we're only halfway to the last peak of where we were with the 10-2 yield curve. We're only halfway there. So we haven't even seen anything yet. So that's what we should be taking a look at and basing our bullishness on gold and silver prices for the future, as opposed to just taking a look at what's been happening on the day-to-day, such as what's happening with the VIX, so on and so forth. Because, again, though I do think it's important to pay attention to what's happening in equity markets, primarily for the reason of not getting our nerves shaken when we see things like gold and silver, taking a little bit of a breather here. I think the more important thing to do is to focus on the fundamentals, which is gold and silver will be a part of the reflation trade that is, in the words of Jim Wyckoff, heating up. So guys, let me know what you think about this in the comment section below. Thanks again for watching. Please hit that like button. Please subscribe if you're new. It's Black Bullion for goldandsilvertoday.com.